Hi guys, today is January 28th, 2021, and futures are actually pointing to a higher open after being negative pretty much the whole night. And GDP came in at 4.0% versus 4.3% expected for 2020, so lower number, but unemployment claims came in less than expected, so that's good. And so market kind of rebounding from yesterday. But the real story about yesterday was, of course, GameStop, and GameStop shares are gaining again. And but it was gaining before this morning, and but dropped just recently. And some of the brokerages are restricting trading in GameStop shares and AMC shares and all the heavily shorted stocks. And a lot of hedge fund managers are caught with their hand in the cookie jar, and now they have to cover and in shares of GameStops, and they're being caught short, and then now they have to cover, or in order to stay short, they have to sell other stocks, good stocks, pretty much like Microsoft and Apple, Netflix, and others. To stay within this short to raise capital, so that's I think what I think is the real reason for the drop yesterday, and we'll see what happens. So let's jump to SPY. And before we do that, actually, if you want to see my trades on pretty much everyday basis, you can check out a link to Patreon club in the description of this video. And also drop me a like as it helps me with YouTube algorithm. So let's start with SPY. So SPY has dropped yesterday, as I mentioned already, but it's some kind of a make or break moment for me for SPY. So I think it could rebound, but in general, like I told you before, February is not a good month for the stocks, so I would be careful here. Okay, so let's start, of course, with GME. And GME shares are dropping pre-market right now, and they were as high as I've seen this morning as like $470. So, but the news that a lot of brokerages like Robinhood and Ameritrade and E-Trade are restricting trading in those shares, bringing the stock down. And there's a lot of talk about regulation and this and that, and that irritates me a little bit because, the first time the little guy wins, and they're trying to basically bring regulation to bail out the hedge funds. So that kind of doesn't sit well with me. So the shoes, because all these hedge funds were shorting heavily GME. I would just let the natural course of this to unfold. Basically, let the shorts cover and see what happens. Because there's no collaboration or anything like that. Not to mention that the hedge funds, those are the ones that collaborating, meeting. I'm sure in a conference, tight conference rooms, and nothing comes of it. But when the little guy collaborating, basically not collaborating, but encouraging each other to buy the shares, all of a sudden we're bailing out the hedge funds. So, but in general, I mean, this run that GMA had and AMC had, they're both unsustainable in my opinion. And of course, they have to come down because this is like crazy. I mean, I'm not even talking about RSI. RSI close to 100 on those, but on both of those stocks. So they supposed to come down. I mean, there's no reason for them to be this high, and they will probably come down. And people who are buying at like 340 to 470, I mean, this is just ridiculous. But obviously, it's short covering, and anything can happen when short covering starts. Okay, so let's move on to Twitter. So Twitter permanently suspended the account of MyPillow CEO Mike Lundell after what company said was a repeated violation of its policy of spreading misinformation about the election campaign. Uh, Also, Twitter is too politicized for me. I mean, the stock looks good to me, and it looks like it may go higher actually, but it's too politicized, and seems to me that Twitter is on the left side, and they're supposed to be neutral to me. Okay, so I mean, if I come out and say something about the election, my opinion, what I should be shut down, doesn't make sense to me. So I am for freedom of speech, but this is not a political channel. This is a stock channel, and in general, the stock may go higher, but too politicized, and I would just leave it alone. Okay, GE. So shares of GE are higher, and they reported earnings better than expected results for the quarter in terms of revenue, but actual earnings were actually shy by a penny. But better than expected industrial cash flow. Aviation unit was down 41% year over year, but it was actually less than expected. It was down less than people thought it would be down. So GE shares, in my opinion, is a buy at this point, and CEO Larry Culp did a great job in GE, and I think GE shares will continue to go higher. So I think it's a buy here. Okay, Microsoft. Microsoft shares are higher pre-market, and it was higher yesterday a lot, but because of the sell-off, shares were only edged a little bit. But generally, Microsoft reported spectacular earnings and beat top and bottom, and estimates were crushed and basically beat on revenue by 10, almost 10%. So Microsoft shares is a big buy for me, and I think it should be going higher. And I think Microsoft is an excellent place to capture further market share, actually from AWS, and the cloud unit reported a huge rise, and Microsoft is a buy to me. So that's it. AMD. Okay, so AMD reported also good numbers, beat on top and bottom line, but investors seem to be wanted more. But to me, it was a great earnings report, and but the yesterday's sell-off took down the shares. I think it's also a buy to me. I mean, for $90, I think you can do worse than AMD. Texas Instruments. Okay, so Texas Instruments, same story as AMD. I mean, it reported great numbers, but it was dropped because of the sell-off yesterday. But actually, it does look worse than AMD actually, because they magged across here on technically. So I would rather buy AMD than Texas Instruments, but in general, both of them are pretty good companies and good to buy for long term. Okay. American Airlines. So American Airlines shares are higher, like what, 40% pre-market. Was surging because the company expected better than the expected quarter, losing only 3.86 $3.86 dollars per share versus 4.11 expected. Revenue came in also above and better than expected, but you have to remember that American Airlines has a high short interest, so I think like 35% shares sold shorts. So it's not surprising to me that it's higher pre-market on this result. So I wouldn't I wouldn't necessarily buy American Airlines at 21, but actually like under 20, like $19. I think it's a pretty good compelling buy to me. Okay, so it's an interesting buy. Apple. So Apple shares are pretty much flat pre-market after reporting a huge quarter. Okay, they earned $1.68 versus $1.41 expected. Revenue came in well above estimates, and for the first time they topped 100 billion. Actually, earned more than 111 billion this quarter for the first time. And I mean, I don't know what they can do more. So I mean, the earnings were spectacular for Apple. I mean, I thought the Apple earnings were even better than like Microsoft earnings. But in general, the shares ran in so much that it's dropping per market. But in general, I think it's a good time to buy Apple on the heels of this report, and I actually think the Apple is going even farther than that, so or higher than that. So I would buy Apple on this report. Tesla. Okay, shares of Tesla are dropping pre-market, and it missed estimates by 21 cents. Revenue came in above and estimates, but the company said it expects annual average delivery growth of 50% going forward. And I mean, they hit their goal of almost 500,000 cars last year, and now they're projecting pretty much 800,000 cars delivered this year. And in general, I mean, Tesla is a good stock. It's a good company, and I don't know if it's a buy on this drop because technically it doesn't look that good, but I would wait a couple of days before buying Tesla. But if it drops to low 800s or under 800, I would just grab it with both hands. Okay, that's it, guys. Don't forget to subscribe to my channel and click the like button, and I'll see you Monday.